Hi everybody, Alex Deploy here from Expert Forex, and in this video we're going to be talking about the easiest trading technique to double your account in one day. And I must stress that this is the easiest technique. You can actually teach yourself to trade this technique in one day and be an expert at it. And even beginners can do that. And besides that, I am giving you a 10 video totally free course to help you with this technique. So let's have a look at this easy technique. Here it is. It's all about channel trading, and in the video I'm going to give you some examples of how an account is doubled in one trade using channel trading. So it's a very important technique, but it is also a very easy technique. Now, in this video, I'm going to show you two techniques: the channel trading technique, which is the actual trading technique, and then I'm going to show you a technique called the double in a day technique, which is basically how to use successful trades to double your account or double portions of your account in one single trade. So let's look at the double in a day technique first, and then we'll go on to the channel trading. Okay, so I did this video a few weeks ago, and it spoke about the double in a day technique that changes lifestyles, and there was a free course offered in this particular video. Please go and watch this. It explains the technique, the double in a day technique, perfectly. I'm not going to do that in this video. Please go and watch it. A clickable link to this video will be in the description of the video as well as in the first commentary. Then I followed up with a few examples, and here you can see quite a few examples of the double in a day strategy. And again, go and have a look at this particular video. Really gives you an idea of how you can double your account in one day. What are the double in a day trades? Basically, it's a double in a day trade will double your whole account or a portion of your account in one trade by topping it up successfully. And you're going to see lots of examples in this video. So that's the double in a day approach, and we can now go and have a look at a combination of channel trading and double in a day trading at the same time. So here's example one, and there are 10 trades that have happened in this week alone. So it has been a fantastic week for double in a day trading, but also for channel trading. So let's have a look at this particular trade. Now, just to explain the double in a day technique, so you would enter a trade in a particular spot, and then what would happen is there will be a top up. And the minute that top up happens, the total trade becomes risk-free because the stop gets moved to a break-even level. Then there's another top up, and then eventually it hits the target. So that's how the double in a day technique works. And here you can see the trades, and what happens is the first trade has the lowest risk, and then it increases from then onwards. And but as I say, the minute the first top up happens, the total trade becomes risk-free. So there you can see how the lot sizing increased over the period of the trade, and all of those hit the same target. So they have a common target, and there's the blue line on the common target, and there is the break-even stop that you can see that was in place when the target was hit. And this particular technique is programmed to generate $1,000 profit on these trades. Okay, so that's the double in a day technique, and here we are looking at the channel trading technique. Now, as I said, that course that I'm offering is a channel trading course, and it merely says you identify the turning points in the market, and then you trade the bounces off those turning points. And that's exactly what happened here. You can see there's a bounce, there's a bounce, there's a bounce, there's a bounce, there's a classical channel trading. Now, a lot of people focus so hard on horizontal support and resistance. I was very, very lucky early in my technique. I actually realized that non-horizontal support and resistance is more important. And here you can see it. You can see the non-horizontal support and resistance playing out. And what happened here, we traded the bounce on that, and then there was a breakout to the next. And very often when you're trading channel trading, the target is double the channel that the breakout happens from, and this was a good example of that. So the idea of this video is really educational. I'm not encouraging you to go and buy the double in a day EA. In fact, you shouldn't if you are not highly competent at trading, but you need to understand the concept. So you can trade the channel trading concept without trading the double in a day. So you just trade, boom, 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 you enter there, you exit there, or so on. So you can make a lot of money just trading the channel trading concept without the double in a day, so that you don't have to trade them together. I just like trading them together because I make a lot of money. So that's example one. Let's go to example two. Again, channel trading, boom, 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 and a breakout. A late entry there. Sometimes that does happen because I think there was a support level that had to be confirmed, and again that's exactly what happened. There was your risk-free or break-even stop entered there, and up it went and hit the target, more or less double the channel width. And you can look at the channel at the trading details at the bottom here from the account. Then here's another one. Now this is a bit of an advanced one because the channel is quite steep, and again all you need for a channel is 1, 2, 3 bouncing points there. It broke out, and what normally happens or often happens is it retests the support level and then shoots up, and that's in fact what was traded, the retest of this one. And there you can see it hit the target quite nicely. Number 4, again, nice channel here, 1, 2, 3, 4, 5. Traded the bounce on a number 5. Because these are pending orders, sometimes they do enter a little bit early, and especially buys you'll never see a buy exactly on the channel line because the spread gets taken into account. So again, entry, top up, and exit there. Okay, another one here, and this is in fact a concept called the dominant angles concept. Now, it's also a concept that I was very lucky to learn very early in my trading career, in that all trading instruments, including shares, and in particularly shares, equities, have dominant angles. So they, so for instance, that's a dominant angle. The price will treat that as a resistance area, and this would be a see, there it was a support, there it was a resistance, support there, and so on. So the dominant angle concept is quite a advanced one, and I'm not going to try and teach, but it's also related to the channels because it creates channel trading. This one's a bit of a tricky one, but essentially again, bounce, and traded the breakout of this particular channel, entry, top up, and there it went, and doubled. In fact, these trades all risk 5% of the count, and they make 100% return, or 105 technically, but I built in a bit of a buffer there to make sure that I get 100. So that's how that one worked. And if you want more information about dominant, just go and Google. I mean, there we are. You just Google it, and what you'll see, that's actually my website. That's my website, and this is my video. So you'll find a lot of stuff on Google, and you can even Google on YouTube. If you do the same Google, you'll find a couple of videos on dominant angles. Anyway, let's move on to number 6, and again, there's the bounce, there's the bounce, there's the bounce, there's the bounce, and then it went up and bounced there, and then again, because it was a buy, it looks a little bit odd, but it entered nicely there, became risk-free over there, and hit the double the amount that I allocated to be doubled. So it's in all of these, I'm going for just over $1,000. Okay, this one's a little bit more tricky because it's a combination of horizontal support and non-horizontal support, and again you've got the bouncing channel in there. But what happens is when you have a non-horizontal support line and a horizontal support line coming together. We call that a confluence, and that creates a stronger level of support that would normally be the case, and that's what was traded, and the breakout happened and the deal was successful. Then the next one, again, channel 1, 2, 3, and the breakout was traded here of the channel. It was supposed to bounce. In fact, it did bounce initially and then decided to break out, and we traded the breakout. That's another technique, channel trading technique, and it hit the target quite nicely. And these trades all happened last week, or literally a few days ago, so you can see these things happen quite regularly. Okay, here's another channel trading, 1, 2, 3, and this was another combination of horizontal support and channel trading, because it then came back, and you can see how strong that horizontal support is. We entered early and it just sat there, and eventually went up to the channel at the top channel line. So that was another more advanced trade, but certainly in the concept of a channel trade. Good. And here's number 10. So again, a lot of channels here, 1, 2, 3. That was a weak breakout, so the actual support was taken there, and then they couldn't quite reach there, and we basically traded the bounce on the next level, which went up to the next level. So channel trading, once you get your eye in, you will see so many channels and you will have so many trading opportunities, you won't know which one to take. Channel trading is so worth it, and it only takes 2 days to learn channel trading. All right, that was number 10, and I think I've thrown in a bonus here. Here's a bonus, and this was again a bounce there, a bounce there, a bounce there, slight miss there. Look, channel trading is not perfect, but a slight miss there, and we traded the bounce on. Firstly, it could have been a bounce on a trend line, but it was basically also a channel bounce, and it went up very nicely and cashed in very nicely there. So this gives you an idea of the importance of channel trading to create really successful trades. That's number one. And the importance of topping up on successful trades in such a way that you double your account in one trade. So you risk 5% over here and you make 105% over there. So here's the course. Here's a clickable link to this course, will be in the commentary of the videos as well as in the description of the video. And this is a YouTube course, so it's very easy, it's free, you can access it at any time, and there are the 10 videos that you can have a look at and do that course. Well worth doing. I promise you, channel trading is alive and well, and you can make a lot of money out of it. I hope you've enjoyed this video. I hope that you take advantage of the channel trading concepts, because they are in fact the easiest one for a beginner or even a most advanced trader to use. Early in my career, I also found that channel trading discounts Fibonacci levels very well. It explains Fibonacci levels, the extensions, the bouncing points, all that. There's a lot of commonality between Fibonacci and channel trading. So again, but you don't need to know all that advanced stuff. You just need to know how to do the basic channel trading concepts, and please do that free course, and it'll be so easy to do for you to trade in future. So from me, Alex Aploy, thanks for watching this video. I hope you've learned a few things, and cheerio.